You are watching Economy Buzz with Mr. Vicky Amarnani, and we are talking about Eurozone financial crisis and its impact toward Indonesian economy. And Mr. Vicky, how significant the Euro debt crisis could impact our economy through trade especially?
Well, I guess trade comes back to exports and imports, right? So as we said, Europe is only 10% of the exports of Indonesia. I think, and I see Europe going through a mild recession. In fact, exports from Europe have already dropped by about 24%, but it has been compensated by other Asian regions such as Singapore, India. In fact, India is having a lot of demand from Indonesia for products such as oil and gas, and especially coal. In fact, there is a shortage of coal in India, so that's a good demand. But there has been a bit of fear that because of the price of fuel to hike up, coal costs for Indonesia can go up, and then maybe the price may not be suitable for the ASEAN regions. But I think that is just going to maybe have a minimal effect in the short term, but I think the demand will still remain solid.
What important factors should you understand, that could affect the global commodity prices?
Well, that comes back to economics, demand, supply, production, investment funds. If people start reducing the investment to the commodity market, that can also bring a drastic drop in commodity prices, which is not supportive for the Indonesian market. The forex, maybe the Indonesia fluctuation of the rupiah, which I expect it to be stable, from within a range of 8,900 to 9,350. And also other things such as inventories, inflation, right? Because if there is inflation in the market, the price of commodities rise too much, they may not be as competitive compared to other competitors such as China.
Oh, yeah, okay. Please
and maybe other reasons are weather. Sometimes you cannot control the weather. If there are droughts, or the crops don't grow well, and there is a shortage of supply, that can again bring a hike in commodity prices, which is not overall healthy. If there is a very big hike in prices, because again that affects inflation.
During this global unpredictable economic situation, how attractive actually doing the investment in commodity market?
Well, I'm a lover of gold, and maybe one of the from a long-term perspective, I think gold is at extremely cheap and oversold levels, at the level of about 1690 now. Recently gold had a correction to a 1626, 1627, with a strong support of 1625, and I expect gold to hold at the level of $1,625 per troy ounce, and I see the fair value of gold at 1750, and over the next couple of months I expect gold to break the level of 1800, and we're going to see the beautiful rally we saw last year on gold as well.
When we're talking about Indonesia, what commodities from Indonesia are promising for the export, let's say, when we are talking about the global trade?
Well, the good thing about Indonesia is that it's not only dependent on one type of export. Of course, maybe 25% is oil and gas, then comes coal, but then we also have promising exports from other industries such as rubber, textile, electronic appliances. So there is a good diversification of exports. So yeah, but of course, definitely what will basically contribute the biggest is oil, gas, and coal.
Besides the trade, let's talk about United States of America as well. What real economy indicators from the Federal Reserve and Wall Street banks we should be watching nowadays?
Well, the number one is definitely interest rates. The Fed, but Mr. Bernanke has already mentioned that they expect to keep interest rates low now, in fact, until the end of 2014, under 1%. I mean, now it's at 0.25. They may hike it 25 to 50 basis over the years, but definitely they expect it to be below 1%, depending on how the economy grows. So you should definitely watch the FOMC statement, because whenever Mr. Bernanke has a very positive comment for the economy and reduces the chance of quantitative easing 3, markets in fact start having a correction. So as long as the FOMC statement is very supportive with low interest rate, that will always support the bond market and the equity market. Other indicators we should watch is unemployment rate. Unemployment rate has reduced from the 10% to 8.3, but is still definitely very high compared to the 4% region before during the booming times. So definitely there will be more accommodative measures to reduce the unemployment rate. Non-farm payrolls. Non-farm payrolls are how many jobs are added or reduced during the month, which is every first Friday of the month. That's an important indicator to watch as well. US crude oil inventories published every Wednesday. That also shows how much demand there is from the market, because if crude and oil inventories are very high, then that shows that demand for oil is reducing, or there is contraction in the economy. So that's another important indicator to watch. Other indicators I would say is maybe the manufacturing index and the retail sales. If the manufacturing and the retail sales is healthy, that shows good growth. And then the next indicator to watch definitely is the GDP growth in America, which is now at about 2.8%.
Generally and macroeconomically, do you see US market is slowly healed? Can we say that?
I think it's still a long way to go, but and they're now in the recovery phase. But I still see at least another 3 years for America to come out of this whole recovery phase. And maybe that's why the bigger concern is their debt. The debt has reached 15 trillion, which is 100% of GDP already now. They have to slowly manage to reduce their debt. As we know, July last year, America's rating by S&P got cut from AAA to AA+. So definitely they want to keep their debt under control and maintain the solid rating that America has.
At least there are about 3 years period of time for US market to be healed.
Yeah, exactly. That's why they're keeping interest rates low till 2014. So to accommodate the recovery, interest rates need to be kept low.
What about European countries? What must they do in returning to growth?
European countries, first of all, government spending cannot stop, right? The problem now with European banks is that all the deposits or all the extra liquidity they have, they're depositing it in the European Central Bank. Instead of lending it to other banks who need the money, so that they can stimulate growth and lending in the country, they're storing it. There's about 800 billion deposited in the European Central Bank. This is not good. They have to convince banks to lend to other banks. If you don't have confidence in each other, it's going to be a lose-lose scenario. So definitely banks have to start lending, government spending. At the same time, they have to bring their debt under control. So through the government spending and the growth, they should be able to reduce their debt. They have to reduce unemployment rates. As we discussed earlier, Spain youth unemployment is as high as 48%. If the unemployment rate starts reducing, incomes start rising, that is going to be another growth stage for Europe. But again, I see 1 decade going away for the European to deal with this crisis.
How global markets see our country, Indonesia, as the investment destination so far? We are appearing to be one of the emerging countries.
Yeah, with the investment grade. So I expect more and more foreign direct investment coming to Indonesia because maybe the climate in Europe is not so pleasant. That in fact is a positive for Indonesia, in fact, for more money to come here. In fact, I do speak to a lot of investment bankers as well, and they keep questioning me about how's the Indonesia market. There are a lot of clients overseas from Mexico, Brazil, from US, Europe, small Eastern European nations such as Ukraine, who are looking to invest into Indonesia, which is a very healthy thing. So if people think that the investment in Indonesia has already peaked off, there's going to be capital outflows, I still think there is more foreign direct investment to come into Indonesia, especially in the infrastructure and the oil and gas sector.
So the sector would be attractive for the foreign direct investment will be infrastructure?
Infrastructure, oil and gas, coal, also property. If we see property has escalated or has risen tremendously last year. I stay in Kelapa Gading. The price of Kelapa Gading, the prime Kelapa Gading areas have gone up by 80%. So some investors have a fear that property prices in Indonesia have risen too much already. But if we compare it to ASEAN countries, in fact, Indonesia is still very cheap compared to Singapore, Malaysia, or other neighboring countries as well.
So we can see also the property sector is promising as well.
Very promising. People think Bali has overheated. No, Bali is still very attractive. But I would definitely advise to invest into the prime areas such as Jakarta. Tangerang is also a very growing area, Bali. These areas, property prices are still very cheap and we can still see a very good return for this year.
Alright, Mr. Vicky, I would like to ask you more also about monex invest in the futures after this one.
Thank you.
Make sure you are still with us. We still have one more segment on IBAS talking about Eurozone financial crisis and its impact toward Indonesian economy.